Have you ever wondered how people make money while they sleep? Or why the rich always talk about investing in the stock market? In this video, I'm going to explain the stock market in the simplest way possible, even if you've never invested before. By the end of this video, you'll know what the stock market is, how it works, how beginners should invest, and common mistakes to avoid. So make sure to watch till the end. This could change your financial future. So let's get started. The stock market is a place where people buy and sell shares of companies. When you buy a share, you are buying a small ownership in that company. For example, if you buy shares of Apple or Tesla, you technically become a part owner of that company. Companies list their shares on the stock market to raise money for growth, and investors buy these shares to grow their wealth. The stock market works on a simple rule: demand and supply. If more people want to buy a stock, the price goes up. If more people want to sell, the price goes down. Stock exchanges like the NYSE, NASDAQ, NSE, or BSE act as marketplaces where this buying and selling happens. Today, everything is digital. You don't shout or trade physically. You use a broker app on your phone or computer. Number 1. Wealth creation. Over the long term, stocks give higher returns than savings accounts or fixed deposits. Number 2. Beat inflation. Inflation silently reduces your money's value. Stocks help you stay ahead. Number 3. Passive income. Through dividends and long-term growth, your money works for you. Let's now understand types of investments. 1. Stocks, shares, buying individual company shares. Higher risk, higher reward. 2. Mutual funds. Your money is invested by experts in multiple stocks. Best for beginners. 3. ETFs, exchange-traded funds. A mix of stocks that trade like a single share. Low cost and diversified. 4. Index funds. They track the overall market like the S&P 500 or Nifty 50. Great for long-term investors. Let's now understand about how beginners start investing. Step 1. Open a Demat and trading account. Use a trusted broker. Step 2. Start with small amounts. You don't need a lot of money. Start small and learn. Step 3. Invest for the long term. Avoid day trading as a beginner. Step 4. Diversify your investments. Don't put all your money into one stock. Let's now understand about fundamental and technical analysis. Fundamental analysis. Studying company financials, profits, growth, and management. Technical analysis. Studying charts, patterns, and price movements. Long-term investors focus on fundamentals. Traders focus more on technical analysis. Let's now understand about common beginner mistakes to avoid. Most beginners lose money because of these mistakes. Cross-mark investing based on tips. Cross-mark panic selling during market crashes. Cross-mark trying to get rich quickly. Cross-mark not doing research. Remember, patience is your biggest weapon in the stock market. If you found this video helpful, make sure to like, subscribe, and share it with someone who wants to start investing. Comment below if you want a video on how to choose stocks, mutual funds, or trading strategies. Thanks for watching. See you in the next video.